what are the tax implications for incorporating my company? Now, this is a very, very good question. At the end of the day, choosing an entity form is a very difficult decision. Should you be a corporation? Should you be an LLC, a partnership? Should you just operate as a sole proprietorship? But the overall point from a tax standpoint is that the entity form is not going to make a dramatic difference in your overall tax liability. It's just not a tax decision. There's certainly other reasons beside taxes to choose one entity form over another. For example, you may have heard of limited liability. Forming a corporation or setting up an LLC to protect your personal assets from the liabilities of the company is a great idea to form a corporation. That may be the most common one that you've heard of. Other reasons are exit strategy. You know, what are your long-term plans for your company? Have you built a cabinet repair shop, or you make furniture, for example, and what your goal is to turn that company over to your kids and to your grandkids, to be in the family for hundreds of years. Operating that as a family-owned sole proprietorship is probably going to meet all of your goals. But what if you've developed a new video game and you want to take it public? So you want to go on NASDAQ or go on the New York Stock Exchange one day with your new company. Those companies typically are in the corporate form of organization. The New York Stock Exchange, NASDAQ, are used to selling shares of stock in corporations. You're going to have 10Q filing requirements and 10Ks and 8Qs and all kind of numbers that the SEC needs. But being a corporation from the beginning may put you in better stead of meeting that goal if that indeed is your exit strategy. Another one is marketing. You know, I hate to say this as a small business owner, but big businesses like doing business with other big businesses. So having a cool name like Paradigm Resource Consulting rather than Keith's Accounting may be better. Having the word Inc., being an incorporation after your name, could help you from a marketing standpoint. All those are reasonable reasons for choosing an entity form other than just being a sole proprietorship. But don't let it be from a tax standpoint. Now, to your question here, California, if you already have chosen for one of those reasons to be a corporation, you are going to have a number of tax issues. The corporation is a separate entity from you individually, so you have to file a separate tax return for the corporation. And you use Form 1120 for that corporation. You got to be real careful with the double taxation, which is where the corporation pays tax, and then when it gives you the money in dividends some other year, you're going to have to pay tax again. So if you are a corporation, our previous question, we talked about when should you have an accountant. If you did form a corporation, you may have a bigger issue with tax planning, with managing that double taxation thing that I just mentioned. So it might be a good idea for you to consider visiting with a bookkeeper, a CPA, or a tax professional to make sure at least each year end you have some good tax planning for your corporation and you individually. So that may be the biggest tax implication you have for forming that new corporation. But that's a very good question.